here.
Morning.
No
Good
worries.
morning. No worries.
Morning, everybody. Hey, this is session 30, or lesson 29A for the Creativity 202. It is January 15th, 2023. And we'll start off with a quick check-in in the order I see on the screen. Kyun, how are we doing today?
Yeah, doing good. Doing good. Nothing much to report really. Just it's ordinary day. Went about my day, and yeah, good to be here.
Awesome. And Tom Sullivan, how are you?
Doing good. Busy week. Uh, but everything's all right. I was out with the dogs this morning. It was kind of cool. I took a long walk. Uh, Everything's all right. I
What
hope.
kind of little white dog is that behind you staring at us?
Uh, that's a half lab, probably part Pyrenees mix. He's the one
Right.
that likes to pull me for a distance. So.
Yeah, I was going to say he's going to get some size there. And good morning, Ernie. How we doing?
Good morning. Everything's pretty good for me. I lost my AT&T yesterday, and so we went like 12 hours with no TV, no internet, no telephone, and it's I really really surprised how dependent we are upon that. My wife said, if you don't get this thing back, you're going to have to put up with me all day long. So I was motivated, but it finally came back. And so I was really grateful that I was able to be on today. So
Yeah, we'll edit that out.
yeah, thank you. Thank you. I forgot I'm documented now.
That's right. That's right. Chun Long, how are you, sir?
Good. Good morning. Good afternoon. Everything's good here. A good week for me and nice weather, except yesterday. I'll tell that in our session. I hope.
Nice. And Sunal, how are you?
Never better. Sun is shining. Absolutely beautiful here today. Yeah, great. Thank you.
Awesome. And Jeffrey?
Yeah, very good. Nice sunny day, like Snowball said. So we got out there and tried to make the most of it. And then we were kind of rushing to get back here on time, and we just about made it nearly. But yeah, all good over here. Thank you.
Hey, I'm really looking forward to that interview that we're going to do. I think keeping it concise set of questions. You know what questions to ask to get us launched,
Yeah.
and I owe you a list of indicators, and I hope that the read aheads and some of those resources will fill in the gaps for other people that have niche interests, and that'll help the team. So
Yeah, agreed. No, looking forward to that. That'll be up before we know it, right? Like what, 3 weeks or so? It's a short month.
God, I
So
know.
so yeah, it's a little
I'm
I
planning to be
finally
well prepared, but I won't be.
that's no, you don't need to do anything really. You're well prepared just from everything you do every day.
just just push to play. Push
Yeah,
play.
that's it.
That's right. And Tom Hardison, bring us home. How we doing?
Good morning and good afternoon. It's the sun's peeking through the clouds, and I'm feeling pretty good. Got a couple artifacts done, and we're a way of closing out last year and setting up this year. So glad to be here in focusing on breaking inertia.
Yeah. Here we. Yeah. We'll start the breaking inertia with a round of gong tones in the usual way. So here we go. Why is that not working? Oops. 1, 2, 3. Oh, I had it set wrong. Okay. off. Junlong.
I waited from my notes. Work in progress. My word of last week is a boiler. I really like the analogy to self-control, the emotion control. The question is how to regulate the inner pressure, how to regulate the anxiety. Is the release valve really well designed? Even we think about how to release the pressure. So I don't think have really thought about that before. How do we release the inner pressure? If the heat will harmful for somebody, will that hurt somebody, especially family, because they are really close to the boiler? That's give me an insight, all the psychological work have done in the Super Trader program is really regulate the pressure, the anxiety. The minimum is don't let that pressure release to somebody and hurt somebody, hurt those close to ourselves. That's the lesson learned from that boiler analogy. My work in progress really get a courage to review Ken's 8-week live trading portfolio review. That's a part of advanced swing course. Review the weekend one, probably some others. Take notes and get a general idea how to apply the exit strategy, how to manage swing trading. That make me think, the mental models we apply. For me, I know it, participate the nightly podcast, so many sessions, more than 6 months. I know how to do that. No, I don't think, let me back one step. I know what the exit strategy is, right? Do I believe it? I think I believe it. Am I convinced about that? Probably. But the lacking one is action. So in the past week, when I actually review how can manage all those swing trading, it's a change myself from knowing to believing to convinced, finally take action. So I take notes and generalize how to manage that, then finally get courage to review my past trades. Simply apply the 2-bar low as my trailing stop, and in some cases use the no loss plus dinner for 2. Because in a few cases, just apply that to my past trades. It really what it done to me is preventing the huge loss from gap down, from the market sell-off. What I did before, so try to follow the mechanical exit rules, right? I need to get confirmation from market timings. Say, okay, market turn negative, I have to sell. That's when I sell. Or I wait my initial stop hit. So I applied the new trading stop, most of the case 2-bar low, some case is a no-lose plus dinner for two. It give me really improvement. This is a real trading. I took 66 trades in 4 months. The real result is loss minus 12R. So when I apply the simple trading stop, it turned that 66 trade into 11R winners. That's big improvement. That's about 24R improvement. Then apply that same strategy to my paper trade. That's a 55 trades. That's minus 32R loss. Turn that into 11R winners. That's 43 improvement. 43R improvement. So the paper trade is I apply pure mechanical exit rule. That's a 20-day exit. I take entry waiting to the 20th day. So no matter what happened in the market, I just simply apply that. That's why, the 55 trade turned into minus 32R loss. Because in that period, the market, it is from early March in early May. That's a big market sell-off days. That's why that's 32R loss. So just simply apply to Barlow as my trading stop. It turned to 11R winners. So the lesson learned is do not believe in the trade. I have to actively manage my trading stops. When I do the exercise, the one idea come out, how come I was so stupid? Let that winner turn into 1R loss. Some cases even more than 1R. The lesson learned is this: re-entry is the key to sanity. Why I keep, stay in the loss trap? Because I still believe in my trade. I thought it will be a big winner. I don't want exit and see it turn into a winner. That's why I stay in the loss trap. The way get out of the loss trap is this mantra: re-entry is the key to sanity. Also, I see the power of no lose plus dinner for two. If I get a winner, a small winner, I can always get in again. That is the power of free lottery ticket. That's what I did last week. So I did the exercise thinking I will treat that strategy again, apply the new trading stops. That put me in, recall all the painful experience. So that turned my Saturday is really a painful day. So Saturday I want to, write a trading plan, take action, apply the new trading stop. That's my thought. Then that thought, triggered the bad experience. That bad experience, put me into a lower mental state for almost the whole day until the evening session, and I really enjoyed, the Saturday swing trading session. I'll tell you guys, yesterday Ken's coaching is really, really wonderful. Somebody may charge that for $1,000. That's how wonderful it is. It's priceless, but if you want me to put a price on that coaching, that's yesterday, last night coaching, at least $1,000. That's my work in progress. Today's lesson, how to break inertia. I did that lesson yesterday. I even start reading before that. Practically learn from the community, ignite new ideas for me. That's enough. Participate in the nightly podcast, seeing the difference between myself and other traders. Also, this creativity tool lessons, and watch other recording. That's enough for me to break inertia, to make some changes. The traders exercise, look at the charts, it's a really wonderful, really powerful how to apply the simple sniper trading rules. It's remind me I still need to do the kata challenge. I haven't done that really. For me, it's more to heal myself from past bad experience, recover from that. Hopefully all those bad experience turn into a positive improvement in my trading. That's my take from today's lesson. I hope.
I would agree with that $1,000 for that session yesterday. It was off the chart good. It's posted in the course for you guys already. Kyun.
Hey everyone, I guess I missed the wear red or black memo. Boy, everyone seems to be getting ready for Chinese New Year, it seems. Anyway, hope you guys are good. And so my reflection on the word, last week my word was dogs. Because Tom and Ken were talking about the dogs, but also because I had this phrase while some of you were talking, telling your stories, from the phrase from lesson 15, which was, you dogs, do you really want to live forever? And that lesson was about neutralizing hopes and fears, which I'm applying like crazy to myself, but it seems could be applied to many of the situations that came up as well. So that was one association, and then the other one was dogs of war, right? Which since we're just talking about the military and battle and that came up, and that phrase came from Shakespeare and Julius Caesar, and who is somebody we've looked at as well for his military strategy. So the phrase is really from cry havoc and let's the dogs of war. So I guess those kind of things were somewhere in there floating around last week. My theme for this week is less is more, and I talked about that last week when I was doing my presentation. That I had a less is more approach. But when I actually went to do a dry run for my presentation, it ran to 1 hour of me talking. So need to cut some of the slides and talk less. And I'm going to start probably with now this session and practice. So this week, less is more. Yeah. So well, I'm always encouraged by Chun Long, sharing his story, your story, Chun Long, and his trading journey. My trading results, this is my work in progress, is so it was going in the right direction from October, November, December was going kind of up in terms of the R, but January has been a shocker, and it's reversed, come straight down. I think I'm minus 10 R so far for January. But I kind of have to remind myself that I'm in the testing phase, and I'm testing many things. Right, this is the way I want to keep myself motivated, and more importantly, I'm remembering the lessons we had. I think it was honing creativity, 26, 27. It's about fast testing multiples and pushing things to the limit and letting them fail. And I kind of have that thought, and I keep pushing things to the limit when I'm doing this trading, because I think it's important for me to realize how far I can push this. And if I fail, I mean, it really has cost me no money right now. So that's kind of important. But I learned many things. So I guess things I'm testing are things like span of control. How many symbols can I test altogether? And I keep pushing it and adding another one every day until I lose control sometimes. And so that I guess I at least am saying why I'm getting those negative R's. But anyway, it's about getting to know a few symbols as well. So I keep trading them. Execution excellence. I'm learning a lot of the coaching from Ken. I know on the nightly podcast. It's I mean it really is invaluable. And the feedback on the things I've posted, like Carter 2, what I learned recently. I mean, we all know Carter 2, right? I mean, that's the first thing you learn. It's it's one of the foundations. But actually learning to see the Carter 2 based on the RL10 took me a long time, because I always was trading price action. I mean, that's from legacy from how I used to trade, and it took hundreds of trades just and feedback from like Ken, just to say, oh wow, yes, Carter 2, now I'm getting it. That's the RO10 is turning, let's go above dragon. And that's why when I see some of this trades of the day, and then there's so much confidence in going in there. So anyway, so pattern recognition, I tell myself these are the things I'm testing. And of course there's psychological stuff that always comes up that I didn't even know I had or I was going to experience. Things like keeping score and how that affects how you trade during the day. So I guess on the plus points to keep myself kind of feel better is that I am seeing the pattern better. And I feel that January or the last couple of weeks, I really understand Carter 2 in the sense that I really feel it and I can trade it. In the past, I would, because I keep looking at price action, I get a bit nervous going in, and if it doesn't feel right. But now there's less of that. So on the plus side, I feel that qualitatively I am getting better. I am improving. And the other thing, I guess, is that I don't have R's are less than minus 1.5. I mean, given slippage, at the most is always -1. I would take the loss there, but there's some slippage sometimes. And the other thing I discovered with my paper trading platform or app or whatever you want to call it, is it's got some shockingly widespread sometimes, and that is also what I'm testing as well. So like I tried testing trading PG the other day. I mean, I've entered the trade. It was like 3-cent spread, which is already wide, and then it like went to 25-cent spread, and I was like, what is all that? That cannot be. That is not what my real live, trading data is telling me. So, so that's part of it, of testing these things. Anyway, what else there is? So yeah, it is painful to see myself, going backwards, and I guess that ties into today's lesson about, ego or the pride, because in a way, R is the measure of, the direction we are going, right? And we want it to be positive, of course. But I think I mustn't forget that this is really a testing phase, and that there's so many things out there that I still need to refine and that I'm working on, and that I am kind of happy that I'm taking the steps linked to, I guess, this week's lesson of like reaching out to people for feedback, like posting the charts and getting feedback from there. So I think that's really important for me. And in terms of the traders exercise, so less is more. So here's the summarized version. I was, of course, resistant to do it at first, and wow, another video, I'm going to watch this and that kind of stuff. But as usual, I push through that. Just got into it, did the exercise, and I watched the video. The only thing I noted was that the still chart, is not the same as the chart in the video. So I guess, yeah, so I did the work on the still chart, and it's not, doesn't seem to be the same. So I can't have the insight of, oh, what did I think, and what did Tim think. Anyway, what the big story is, I learned how hard it is to coach, and I mean, I have so much now increased respect really for Ken and what he does every day, and really the like when you review the students' work or traders' chart, it's quite phenomenal how how you can give feedback. I guess that comes from however many years you've been trading and training and doing it. And I noted that you needed a lot of trading experience and a lot of successes, and also to coach you also need to be constructive and encouraging, right? I mean that's to get the student to carry on and to improve and to get achieve excellence. The other thing I noticed about doing the exercise was that it's about it's about Tim and not about me. So I kind of do this exercise. I kind of discover things about myself, and then I mean, of course, I'm not really giving any feedback, but I just thought, well, a coach is really about focusing on the student and how to using only what's relevant from your own experience to help him. And I think that I had an action. I thought. Also, I watched a video and from Ken's comments, my action was that I need to record and analyze my entries and exits, so I can see which ones are working and which ones maybe it's my own trader quality, and I tend to take a lot of breakouts, which I have a feeling is not really working. So that's something I'm going to be doing. And yep, that's it for this week. Hopefully that's not too long. I hope.
Tom, then Ernie.
It's been a rough, it was a busy week. I'll put it that way. It was last night. well, my word for last week was accountability. But yesterday actually was my daughter's birthday, so we took her out to eat. She was 24, or she is 24. So we went to a Chinese restaurant. And funny, the reason I bring it up because like it was funny. We got these fortune cookies, and the fortune cookie that I opened last night was which I really don't eat, but I was kind of told to open it. And what's your fortune? And I didn't have my glasses, so I was like struggling to read these little print. But anyway, it said something like every hardship is a learning opportunity for your future success. And I was like, wow, that's a good one. So I wanted to share that for everybody, or this, because I know we go through rough times and we got to look at it as a learning opportunity. And Carolyn, I could never tell. I see your trading when I review. I'm like, see you smoothing out and getting better and recognizing the patterns. And I'm like, wow, nice. It's trading good. So I'll go right into I watched a couple of the videos and I did go over Tim's chart. And the things I learned from Tim is very professional when he's writing all his information in. And the things that really stood out to me is what he's thinking at the time of his entry, what he's saying. Because when I go back into my own, if I review, sometimes I'm reviewing something that I may be paper trading or did during the day. And I'm like, what did I see at this time? Because I'm not really seeing it. So his ability to write down what he's thinking, why he's entering, where he thinks he's going, or at the end of the trades, why he got out, any questions he had, I think that really displays a lot of professionalism, and he gets a lot of coaching back related to the situations he's in and questions he has about his situation. And so I thought that was really good. Let's see when I was looking at his charts, well, a lot of times it's busy because I'm working during the trading day. So usually at night I'm spending or I get up early, spending a lot of time on reviewing charts, patterns, looking at how the patterns relate to our system, and trying to recognize it in a longer time frames, so that when I go to the shorter time frames, see if I see the same type of patterns when I'm have some time to look at the day charts or day trading. And when I do enter and review, one of the things, I was getting bad fills, and I would go to like the level 2 and start watching level 2 and see what the spreads are, and understanding why my fills would be bad, because it might be a big spread. So I'll enter based on a price, and of course where I use kind of my level 2 if I'm going to enter, or give me a kind of tip on when I'm getting in and out. And some of the insights, like some of the action steps, and I did write some priorities, and that I have with trading, the situations I'm in. I can't do a lot of day trading, but like I said, I spend a lot of time reading charts at night and trying to get a good orientation on where I'm at realistically, and where I want to be. I think last week I talked about transferring some funds, which I did a little, but I had a hard time finding an account number. So I'm still working on Tasty Trade and transferring something into another account. And once I was working a little bit on it this morning, just trying to get more organized, which it's not as bad as it looks here, but organized to be more prepared for trading and sorting things out. But some of the insights and the action steps. It said let's see, what do I see? I do look at Tim's chart, and I see a lot of the same things Tim do. I could see entries and exits and the feedback. I mean, there's no question he's getting great feedback from the coaching. It's hard to say. I like to use a standard exit. I really like the 1, 2, 3 exits. So it's hard for me if I'm day trading not to take the 1, 2, 3s. I feel like if I let it go too far back, then I'm giving back too much. But that's if I'm day trading. And yes, you could always re-enter, so I don't feel bad about re-entering. I do watch the patterns. I'll watch for some consolidations or and use my resistance and support levels so I don't get caught up in chops. As far as any insight, that's a lot of the insight. Usually I take a lot when I'm listening to the feedback that Ken's giving. I take a lot of that like he would be giving it to me, to get a lot of understanding out of what he's saying. The entries, yeah, I do watch volume a little bit to give me a tip on a good entry. If the Kata 2 is getting a little bit of push from the volume, it's on my chart. But I'm not really doing much day trading right now. I've been working a lot. These last couple of weeks, we had a bunch of people laid off, so they've been running me around a lot. But I do take time to look at the charts. I'm watching for the movers. I'll go to I got them on my Thinkorswim on my mobile, and I don't have triggers because if I get alerts, I'm not looking at the phone. So what I'll do, I'll go into my summary, and I have most of them loaded into my watch list. And so I'll watch for the sectors or what the market's doing. I'll see if it's up or down, which sectors are usually moving the most, and then I could go into and of course I have the steals and Devon, and I'm watching Brazil and Mexico a lot to see which ones are moving. But I'm not really. I used to really push real hard just to trade, and I think I've relaxed a little more, and I realized that if I'm going to enter and I have the time to do it and I have a signal. The reason I say I use Thinkorswim is because I could set a trailing stop. So if I'm called away, I know I have a stop on the system. And so that's what I'll probably be doing for a little while until I plan on taking a week or two off eventually, and just spending a lot more time trading at home and see how that works out. That'll be like a testing phase for me for this year to see where I'm at and see how what type of results I have when I use that as a step in the right direction. So Aho.
Ernie.
Setting my stopwatch, make sure I don't ramble. I take away from the lesson is that because inertia is inevitable, change is inevitable, and that we have experience in the environment and we have an obligation to improve the environment and better ourselves. And so the lesson had two exercises. I changed them just a little bit, adapted, I guess you might say. I really like true storytelling. It's been a wonderful experience the past year, and it's to me it's really amazing. You're not pursuing a grade. There's no GPA. The focus is on learning and understanding, and and I've been in a couple of other true storytelling groups, in a different group, and I guess I hope I'm not crossing a line on this, but in a different group and through a private email and a chat, I was told that I had a problem, and I was then told what the solution was. Here's what you should do about it. And I know it was well-intentioned. However, I kind of felt it violated the no judgment rule of true storytelling. In the lesson, it talked about the process of cross-pollination. I felt that when they talked about it, it addressed that rule of true storytelling. The process of cross-pollination in the lesson, basically, I think it was in the last bullet point when it talked about it, it said that no one wants to be told by outsiders how to fix their personal business. No one wants to admit that they aren't masters of their own domain. So the process stimulates each unit or individual to prove that they can come up with better solutions to their problems themselves. Whenever I got that advice, I guess I kept my reaction to myself. I didn't say anything. I was kind of surprised. It was just something I thought about it, and I just it stimulated, or I guess if it had been in person, I might have said something, but I'm always trying to be the better person. I always feel like my mom in heaven is watching over me, and still, I still want to please her. I still want to do what my mom says, So, I can understand how the story that I told in true storytelling, how that could be viewed as a personal problem that needed a solution. I think the suggestion was that I could use a life coach. And to me, that's kind of absurd, because if there's one thing I can do, it's live life. And I have no problem living life, and I enjoy the way that I do it. But I understand the viewpoint, and in a way, I don't know if I can't say that I appreciated it, and maybe that's what the problem was for me. And if there's a problem, it would have been my problem. So anyway, I did. It was interesting to think back on that, and to really think about true storytelling and how much I enjoy it. And because I'm thinking about, this course is coming to an end, and I'm going to miss it. So I really do enjoy it, and I have learned so much. So exercise 2, I adapted that one to a little bit. I kind of view investing as a game with players. the competition is not to best or beat anyone, but through interaction, all players become better at the game. And as you know, I think, and with this our course, I had an issue with the previous lesson that needed a discussion of an accountability partner. I didn't think accountability partner was all that important, but I did turn to Tom and Joe with my problem, and they were amazing and outstanding, and I'm so grateful for what they shared with me. So I used their advice not to outcompete them, but to rise closer to their level of what you might say is competition, in a sense. I learned that not only is accountability important, but self-accountability is insufficient. I've been thinking about what this person and the other true storytelling group, their suggestion of a life coach. And I do have to admit, after reflecting and after time, maybe I need a coach, not a life coach, but an investment coach. I can see the advantage of it. Glenn Osborne and I have written, and I have to admit, with the we're going to schedule something now that we're through the holidays, so I'm looking forward to that. I think that it's something that I'm going to find useful, and I know Glenn's going to be great. Just the little bit of experience that I've had with him, he's really has been amazing. So I think it's going to be an interesting experience. The traders exercise, I noticed that too about the chart, and so I was using the one in the lesson, and there was something that Ken was discussing just before he got to Tim's chart. He was exploring a band of the stock price. It was sort of similar to like the Bollinger Bands, and he was following the lower level of that and seeing a pattern. The price would go up and down, and there was this range. So he was tracking the bottom part of that range, and he felt like it would, go into a sideways pattern right at the lower level. And so he was looking forward to the breakout. He put a box around the price at the lower level. So, and he covered up half the chart. So, and I'm looking forward to that he's going to be absolutely right. There's going to be this amazing breakout of the price. And it was like whenever he moved that sheet over and exposed it, what was going to happen next, it was like a gotcha. And he's like, well, Ken has a sense of humor here, because the price didn't do anything with it. It just stayed flat. It didn't go anywhere. And so it was pretty good. And I thought that we don't really know what the price is going to do, but we're not going to be surprised by it because we're prepared. But I love the gotcha. And whenever I was looking at Tim's chart, I really thought it was well documented. It's something that he's going to look at 6 months from now and really know what he did. When I go back through some of my stuff, I'm trying to read what I wrote. I can't quite make this out. And I'm trying to figure out what frame of mind was I in at that point. And so I really thought that he has a great start, in that he's going to be able to use that. Not only will he use it then, but he's going to be able to use it in the future. I also thought that his priority was excellent. He stopped trading when he was working with his child. The child was not feeling well, and therefore he stopped. His priority was excellent. You stop trading, you take care of your child, and so he's prepared for anything. That was really great. I mean, that's the whole purpose. You take care of your family, and you want to be a good trader. And I thought that he had a good priority. And if I really wouldn't feel comfortable giving anybody advice about trading. But if I did, following our lesson plan, my advice would be to be open-minded. Not only is Ken a great coach, but he's going to get stuff from the other people who take part in the tortoise community, taking part in this kind of a course. I've learned so much from you guys. There's just been little, and it's little things that somebody's talking about. And if nothing else, to be frustrated and everything, hearing your frustrations, it makes me feel better about myself, and it makes me, just want to hang in there because you guys have figured it out. I know that I can figure it out, and we'll get there. So the other part that I would the other advice that I might give to Tim would be that be open-minded. And if you don't grasp something at first, be patient, and then be aware of what you don't understand, because I found that Ken comes back to these things in the nightly podcast, and he doesn't give up on us. And so I really think that it's really amazing to find out what I learned in the podcast. And then the other thing that if Tim didn't understand something, I would really push to use the search option in the chat room. Because when I've done that, I've been rewarded in unexpected ways. I go back, I'm looking for something. I was looking for the P1 last week, and all the things that I was discovering, I'm writing things down because I want to go back to this. I didn't even think of that. So I think the search thing, I don't know if people realize how valuable that is. And that's the kind of advice that I would, if I was forced to give advice, that I would have given. And as far as my action steps, I guess I'm what you might call a rabbit investor. At the start of my trade, I'm trying to get to no lose plus dinner for two. And if the dog comes sniffing around, I'm ready to grab my carrots and get my bunny butt out of there before Cujo arrives. And for the new year, my project has been working with the PSAR. I think PSAR stands for Please Save a Rabbit. I'm going to. I really want to get into the PSAR for the new year, and I will share one of the things I guess I'm kind of worried about, and especially with the accountability partner. I took Jeff and Bill's course, and I was thinking that one of the things that I wanted to be careful about is that what they had done, they have proprietary information. So I do, and I think in a sense, I think PSAR is very simple, but there's more. It's simple on the face of it, but when you really get into it, there's some complicated. Well, there's things you have to learn. I guess that's what I'm trying to convey. And so I kind of worry about, well, if I do talk about it with somebody else, how do you talk about it, and also but not violate the trust that Jeff and Bill have placed in me about taking their course. So to me, that's a little bit of an issue, and it's something that I guess I'm going to think about. So it's like, well, if I do want to have somebody, an accountability partner, if I'm really placing such an emphasis on PSAR, do I need to look for somebody that took the course, or just what do I do? So I'm exploring that. I'm trying to think. I want to be aware and respect what Jeff and Bill have done, and I think I may have that problem in the future. As Ken has talked about with the creativity course, it's created other, not courses, I guess. Well, maybe, but it's creating other opportunities to learn, and it's creating what those people have put into developing a method or a process, and then sharing that and recognizing the need of the effort that they have put into developing this. I guess it's an interesting dilemma, but it's a nice one. And so I really appreciated the discussion and the learning. So again, a great lesson, and thank you for listening. Aho.
Jeffrey.
I was trying to give Tom a shot if you wanted to, but I'm cool to jump in. Hopefully our camera is behaving better. I noticed a few, I thought I'd fixed it now, but it noticed a few little glitches, so bear with us if that's still an issue. Okay, so yeah, I mean, I enjoy all of these lessons, and you know, it was interesting thinking about this one, you know, all about inertia and the breaking of that inertia. And then looking at specifically at the trader examples, I think for me this time, and you know, we went through the still frame, as in like the screenshot frame, and then also the, you know, the video frame from Tim, and then I don't know if you guys watched beyond that, but there were other you know, sort of people's trades reviewed in the usual podcast sort of style. And you know, one of those was actually some of the Aussie dollar trades on that day. And so if you guys haven't seen that, then this may be a bit unfair, but there were a couple of guys who were trading Aussie dollar that day that were in that same video that Ken put on the lesson just a little bit after Tim's section. And it was sort of a choppy sideways day on Aussie dollar. And a couple of the guys had got a bit chopped up and they got differing results, but they didn't really catch any nice sort of runs on that day. And that's just sort of something that happens. You know, it's going to happen in any market on occasion. And one of the things that it made me start thinking about was there's the inertia of, you know, coming up with your system and running it. And then, you know, you're going to have those days where if we're running that system on a day where the market is just not behaving, it's frustrating and it's energy consuming, and we're getting chopped, and it's probably affecting our will. It's certainly affecting the money side of the equation too. So it's like, you know, how many times am I going to keep going? And then you don't want to miss out if the next one is going to be the one that takes off and then makes up for all the rest, right? So there's the inertia of not wanting to change in order to continue with the system that you've run, right? And I could totally understand that. And that there's probably a point where it's like, okay, well, how far do I go on this before I start to look for like change my system, right? So there's kind of like how much, you know, how much pain in a way do I take it while the system is not performing? And then so I think it just comes back to, you know, knowing your stats, knowing your system, and then possibly placing some other rules in your system. And if we're only talking about, you know, like a day where the system's not working so well, then okay, that's all right. I mean, we shouldn't be changing our system. The question really kind of becomes, at what point does that inertia sort of like lead us down the line of a system that's, you know, no longer performing, and with a few tweaks we could start to do that. But then the flip side of that, of course, right, is you can start to be on this sort of like, you can end up like out of sync or out of phase with the market, where you start to make changes just as the market condition changes, and now the change that you've made would have been okay for the recent past, but actually all that other good work that you were doing, you're now out of phase with a little bit, right? So it's kind of getting the balance right there. The other thing that it made me think of, right, was the inertia when things are going really well. And that's probably one of the more dangerous ones. It's kind of like a complacency inertia, right? And it's that if it ain't broke inertia, where, you know, everything is kind of going well, and then you can become a little bit lazy, right? Or, you know, now you're not. It's that reminding of ourselves that these market condition changes do occur, and almost sort of preparing ourselves for, what do I do when that condition occurs, right? Now, I don't mean psyching ourselves out of the trade and starting to believe that it's not going to work anymore, because it's working, right? I mean, this is like, what I'm talking about is a system that's working and working very well, and we want to run that system for as long as we can, right? So it's that sort of constant evolution and just preparedness, and not falling into the trap of, oh, this is easy. Because once you start getting that sort of almost overconfidence with something, in my experience, that's kind of when you end up getting bitten on the ass, you know. So it's just a sort of reminder of staying one step ahead, and breaking that sort of inertial cycle through all of the good work that we normally do. What can happen? What could happen? What's this going to look like if we get, I don't know, a sharp sell-off? All of those sorts of things, but constantly kind of not letting us fall into that sort of trap, right? I specifically like, some of these examples with Tim, and a few things that kind of just stuck out to me that I'll mention just briefly here. And it's pretty close to Sol and I's heart, because we trade. I think it's on ES, or the S&P. Yeah, he's on the CME E-mini, so he was on ES here, and we trade this all the time, so it's familiar. And also, I think it's in the time zone that we are, or at least very close to it, right? And so I can recognize, in here, a few elements and some of the things that Tim was talking about. And I'm talking about the still picture now, sort of like the screenshot version that was on the exercise, where, one of his questions was, he finds an MMRB from the sort of like the Z3 squeeze, like one of the minimum Z3 squeezes during the Asia session, which is going to be pretty tight, right? We've seen that over and over again. That's going to be pretty small. Now, of course, it's Z3 to Z3, but sometimes that can really kind of squeeze in when Asia is just super quiet. So that works in his favor, I think, early in the day, sort of during the European session. But then you can kind of see, and I don't know if you guys have it open in front of you, but there's a point, it's about 2:30 on the chart. I'm going to assume that's actually probably 1:30 London time, or 8:30 Eastern. And there's probably a bit of news that comes out. And that's when the chart really kind of takes off. And that's when Tim makes, probably his biggest trade of the day there. And so his question really is that MMRB noise box from the morning or from the Asia session, really, is that going to be too tight? And so what I would kind of, I would get Tim to consider on these would be, okay, that MMRB probably makes sense for the European session, but when you get up towards the US session, maybe that's going to be a little bit too tight, and you might want to consider updating ahead of the US session, knowing that the volatility is going to expand and the range is going to be bigger during that session. So anyway, that was just sort of something that occurred to me there that I thought I would bring up. And yeah, it's an interesting thing when you kind of coach people, and so putting yourself in the eyes of the coach and trying to think about, okay, well, what could I bring up here? And there's loads of stuff you can bring up here, and it's, in a way, it's what's the most important things that you could bring up, and specifically, what are the things that maybe you shouldn't bring up here? Because I think for anybody who's going through this, it's easy to overwhelm, and you kind of need to stick with a few basic points and get some of those habits right. If you overwhelm somebody with too much stuff at one point in time, they're probably not going to take any of it away, in one go. It probably just becomes maybe just a bit too much. So from just thinking about it from a coaching point of view, what are the important bits to pick up on that will make the biggest impact with, sort of like, not necessarily the least amount of effort, but the least amount of friction, and then see if you can adjust those things over time. Sol and I don't talk about it. We've done a little bit of coaching before. I don't know if I call it coaching. We've done specific consulting with sort of one-on-one, or actually more two-on-one. It's normally Sol and I with guys before. And so nothing like Ken's experience in this, but, just from our own point of view, and guys who are trying to do similar things to what we've been doing, have some experience in that. And like, I think, was it Kian was saying, and apologies if I've got it wrong. Yeah, it's way harder than you might think. So yeah, respect to all the guys that do anything on the sort of coaching spectrum, and Ken talks about like coaching versus mentoring versus other things, and being quite clear on that. But yeah, the thing that sticks out the most, really, with any of Tim's frames and the results that he was posting, is just how professional he approaches it, and how specifically he's logging everything. And, if nothing else, just by doing this, he's gonna do well. He'll pick up on certain patterns, but by having the discipline to make these kind of notes, which is not easy, right? I mean, I'm sure all of us have done trading notes and stuff before, and it is way easy to go over the top on taking the notes and doing the write-ups, and it's tiring, right? Especially like you've been trading all day, and then maybe you've kept up with it throughout the day, but if you haven't, then it's sort of like something else you got to do in the evening. And then I always find I have to really minimize the friction on trade journaling, because it's so easy to start to put in that extra little bit of information, right? Or, okay, well, maybe I'll just start tracking a different exit and that sort of thing. It's all great until it becomes that one thing, that straw that broke the camel's back. And then all of a sudden you stop doing it for one trade or one day, and then you're behind, and now it becomes stressful. And then ultimately, you don't do it. And then you beat yourself up for not doing it. So, I've been through the cycle on quite a few different ways of trying to capture these results and stuff. And I bring it up because I've seen Tim maintain this through, like, every now and then I'll check in, and I think I know who this is. I've seen he's maintained it throughout, and that is difficult to do, and he's going to do well just by doing that. Okay, so I wanted to also, just while I've got the floor, we guys talk about a work in progress update sometimes. So work in progress update from me. Something I mentioned last time around was that from the last exercise on essentially accountability and putting it out there and having a deadline and then being accountable to somebody, that you guys need to hold me to account and kick my ass. Because I'm trying to come up with a little experiment, a little test here, where I'm going to run 5 different systems with some automation behind it. It's kind of a way of me putting a systems development course together. And I want to do that by running some systems, right? And running them sort of in real time. So part of this whole idea requires running these systems and running them, on actual accounts that have, the ability to get money out of these accounts, so that it's real and people can follow it and that sort of thing. So quick work in progress update from me this week was, I'm actually using some prop trading funds to do this, if that makes sense. There's these prop trading firms out there who make money available to traders. It's a whole kettle of fish, this. I don't want to go too far into it. But it's a mechanism for me to basically have skin in the game, and also have the ability to make money from these systems. So if they work out well, then there's a reward sort of at the end of it. And also I can have dedicated accounts to running these systems. So all of that is a longhand way of saying that my work in progress update is that there's usually an evaluation phase on these prop trading accounts where they want to make sure that you can trade well and manage risk and make money on this. And I've got a specific system that I run for these things that I've been experimenting with for a while. I tend to use event-based trades to do this. So we had CPI this week. And so I was able to get 5 of these accounts up and running. So there's 50 grand a piece in there. So 5 accounts, 50 grand, they're up and running and ready to go for the systems to be deployed into them. So anyway, that's my little work in progress, since I know you guys are going to hold me to account on this stuff. So I think that's probably all I've got for today. So I hope that made a little bit of sense. Aho.
Sunil?
What he said. Oh. Seriously. Okay, I promise to keep this one short.
I may have stolen
You might have stolen a
some
little
of the
bit.
things that we talked about. We
That's
could talk.
okay. I can ad lib. What's that word? I can improvise. Couple of things. Thank you all for your shares and your courage. Both particularly Kyun and Chunlong. It is difficult to talk about trading and the difficult side of trading. What you've both reminded me of is, you ready for this? Maverick and Tom Cruise. And also Brad Pitt in the context of you are understanding your own boundaries and Fight Club. So for Kyun and all of the technical phrase, all the shit that you feel that you're experiencing in January, my mind was going to, well, this is properly total immersion for you as I understand it, as you were telling us what you've been going through. And I think about what Eric said to me, which was one of the things that Eric is the guy that trades with us. And one of the things that he found was as he was improving his trading and testing the characteristics of the target that he was working on, the timeframes, the systems, the mechanics, the brokerage, the whatever, he decided to change only one thing at one time or try to find a way of tracking each of the variables so that together they didn't overwhelm him, and also that sense of progress. Because you could be making quite a bit of progress, but if you feel like you're being hit from every angle, it can be difficult. It can make you quite despondent. And even though you turn up every day to do your thing, there's no getting away from the will being shaved away and eradicated. And I think a little bit about, we'll come back to Tim's thing in a moment, but that whole concept of inertia, something that you've mentioned on our journey in, which was when you're in sideways, that is a sense on the, in a trading situation, when you're in a sideways range, that is a sense of inertia. Things aren't happening, things aren't moving. And sometimes it's difficult in the moment to be able to figure out whether that sideways is a tradable range, or if it's, Goldilocks, is it too tight? Is it too, is the bed too comfortable, not comfortable enough, or just right? And some of those ranges that we get are just large enough to trigger an entry to then turn the other way. Others, with hindsight, like Tim's MMRB box, looks like a beautiful breakout pinch. And other times are so wide that you can just trade the range. And so inertia, when you're in that sideways and you're trying to figure out which trading technique you want to use, can end up feeling difficult, and you get disgruntled as the employees that were described in the exercise here. And sometimes you'll either over adapt or not change at all. So I was thinking about what you were talking about, Kyun, and I'm like, well, he's making, this sounds like from where you were a year ago and the stuff you're talking about and the pattern recognition, and I've seen some of the charts that you put up, to me, the progress is remarkable. But I know the experience and the feeling is, particularly when you're having to pay the fee for playing this game, it doesn't feel so good. But as long as you're measuring, from my perspective, it makes it worthwhile. And with Chunlong as well, I'd say the same things. I am super impressed with the insight about figuring out the inner pressure and the impact the inner pressure could potentially have on those around you as you're recalibrating. And obviously, these are areas that I look into, because I don't know which one of you guys, was it Ernie, but one of you guys had noticed how Tim had the awareness to stop trading when something happened. So that trading is so addictive as a game, as a profession, that you can lose yourself in the pursuit of mastery, in the pursuit of trying to find a system that, you know, the golden chalice, the thing that works, or you're trying to be there for the moment the trade moves in your direction, or you want to manage it in whatever way you want to do. And just at that inopportune moment, something will come up, and then out comes the monster from within. Unlike, now, who was I talking about? Paul Tudor Jones's boss, you know, the guy who just stayed calm despite the fact that I didn't think it turned out to be a very good day for him. So that pressure on the inside makes itself known in that inertia, in that sideways, particularly when that sideways goes for a very long time. And, you know, we're all going to experience it one way or the other in this game. So that's like me rambling. Now, if I think about Tim, so I am a huge fan of this man's work. I hope that he listens to this. I don't know if he ever tunes into creativity calls at all, but I'm a huge fan of all the work that Tim puts up on many levels. So I don't know if I'm allowed to say what I think of it, but I will. I'll break the rules until I'm stopped, until I'm chucked out of the room. But to me, what I see in, okay, so here, no, I'm not breaking the rules. Question 1, what do you see? Yes, so what I see is just, you guys have already said it, professionalism. He is incredibly professional. He's diligent. He turns up every day. He's resilient. He documents like a demon. But that documentation is not overboard. There's still a methodology to how he documents. You know, you can see trade number, what the trade type is, entry, I stop, exit, outcome. And there's even a little note on what that exit looks like. On this particular snapshot, so not the video, but the snapshot, but actually when I just said not the video, I would say every single one of his charts. But honest, he's incredibly controlled. I very rarely have the feeling that Tim is overtrading. Very rarely. If he's dropped down to a 1-minute chart and he's had a nightmare of a day, or he's trying too hard, it's few and far between. It'll be a handful, and man, we've all been there, and we will be there again. Those days get us. So to me, what this individual is professional, diligent, resilient, controlled. He's incredibly self-aware. Wow, superpower. He's Tom, he's curious. I will walk away forever remembering your curiosity. He's curious. Somehow, when he executes his trading and he's documenting and doing the thing, he's still got another part of him that's asking a question, which isn't taking him off the track of what he's working on, but he's curious. What if what would happen if? Methodical. He's really open. He's really open to what could happen next and how he could improve. I don't see an ego. He's superhuman, like superhuman. He's human in that he's transparent in what's happening and unfolding, so you can feel what he's going through as he's going through it. He's not hiding, so that makes him, he's courageous, and therefore very coachable, in my view, and actually very skilled. What else do I see? He's also incredibly considerate to his coaches, in that he takes the time to keep his trade markup neat and puts boundaries around the areas that he was active. So it draws, Ken's eye to the parts of the screen of the chart that he was active in. I can't, I wouldn't even profess to coach him, but I could share some of my experience in that. If he's trading ES, it looks like the 5-minute chart, then I would ask him to just take a look at where his first entry is in relation to the open and in relation to the RLCO. So even though it is a Carter 2, I think, I can't read it. Even though it is a Carter 2 entry, I would say, where was this stop? Was it on the PSAR?
This one?
The very first entry, just this one.
Mm-hmm. Yeah, that was
I mean,
PSAR. Yeah.
I mean, it's a measured risk. It's a measured risk, and it's PSAR. But I would ask him, where is his box in relation to that framework? Would one say it's inside of a range, inside of the noise? Is it a trade worth taking? Now, I'm little miss trade off the open. So who am I? I mean, I'd probably take that trade too. But if he wanted to consider, could that go? Where could it go? Then I'd remind him to look left on the chart and to see if there are any areas where, price could be a magnet to. I think I can see a VWAP there as well, if that's what the orange line is.
Yeah.
I'd also suggest that he just makes a quick check with his MMRB as against that target's frog box. So how big is your risk in relation to the frog box and the hybrid frog? So you get an understanding of what the potential in the day could be. And in fact, what was the previous day's range? And I did have a little sneaky peek. And the previous day and the day before was reducing in range. So the previous day was just under an average range. And before that, I think we just about made a frog box. And before that, I think it might have been a Friday and it was arranged that day. So the question is, what kind of day could this be? What kind of session could this be? Is the trade location making sense? I applaud him for his control and stopping after a couple of trades to see, okay, it's not really moving. So I would then conjure up Ken's mantra of, I'm looking for movement, trade the mover. Is there a tradable move? And here, how far have we moved before we're setting up for the next frame? I would then, revert to what Jeff had said, which is, well, just pay attention to the characteristic of the instrument and the time of day you're trading it. So this is a US index that you're trading in the European session. Now, I say that, but it's been moving. Sometimes it moves better in our session than it does in yours. But if you look at the, at yours as in you guys in the States, but if you look a few days ago on this chart at that time, when he was executing it, it was particularly quiet. And then when we see it starting to expand and move, it now potentially is a tradable target. There's now movement where RLCO works really well. And I would draw his attention to, that fantastic trade, I think it was trade number 3, which was for me, the trade of the day for that target. But hindsight is a beautiful thing, isn't it? And I wasn't sitting with him as he was taking that. I think his losses were super, super tight, super controlled. And yeah, so on that's what I see. The other things I see and that I really enjoy are how the RL start to move up and through the RL 270, which once we clear that, we're either going to continue moving or moving up and beyond, or we're starting to develop stretches that we can start measuring. So, and that's not coming out too clear. Delete that. I think I know what I'm talking about.
Yeah,
But sometimes when we have like a flat VWAP, what I pay attention to is if prices moved away from VWAP or the RL270, I'll keep an eye on how far that move has been, so that if we were to come back and go through it, there's often, and I couldn't tell you why, I'm sure there's maths behind it, but there's often an equal measured move the other side. So I would just, you know, without overloading him, kind of get him to pay attention to how those RLs start to cross over that RL270 and potentially back again. I get him to look at the expansion of those, the river and the Z3 as well, as the range expands. And in that regard, I would suspect that the volatility has gone up, his MMRB, he might start seeing wins and money would suddenly build, you know, the R would suddenly build, and that might have an impact on his equilibrium. But yeah, no, I think, yeah, I think a lot of this individual, never met him. I have peeked at the transcript now and then. I commend his work. Long may it continue. In terms of coaching, I sit on the fence with my view on coaching. There's a, you know, and I pay respect. I mean, everyone's got an opinion and it's okay. And so on the one hand, the purest definition of coaching is that the coach helps an individual get to where he or she wishes to be, wishes to go. So the coach helps the individual discover the answer, discover the way. It's not about being directive. It's not about educating, and so on and so forth. That's a traditional view on coaching. What I find in our field is that sometimes people just want the answer. So now that borders into education, and I see that Ken is an incredible educator. So the power of Ken in his role can be both coach and educator. And sometimes people just want direction. And it's really hard because like we're all grown ups, so you can't expect someone to tell you what to do. But if somebody knows the answer, is it correct, if there was such a thing as right and wrong, is it correct to sit on the answer and let the other person find out? And it could take years before they get there, if they get there. So I'm really conflicted, and I'm quite conflicted. I think I'm more of the directive type, because if I think I have the insight, I'm going to share it, and then the individual can do with it or not, but here's some info when I found this thing, and what do you think? But it's just my views on coaching. In terms of, I don't know if I should talk too much about work in progress. There is something I am really starting to investigate this year in terms of work in progress. And that is, so I listened to Nicole once on one of your US creativity things last year. She was talking about meditation, and what she said was something along the lines of, she became aware that I want to just call it, let's say she got angry about something. So she was a little bit angry about something, and then she saw herself being angry about this thing, and then she got herself in control, and she was like, I just had the insight. But I really rather wish that I knew it was going to happen before it happened. Because that review thing of, oh yeah, that's what it looks like when I've just done that, I want to stop it before it comes about. And she was talking about meditation. So if I took that into trading, so specifically, there are behavioral loops that one might have, like, I don't know, I mean, moving stops, or not taking a loss, or getting out too early. And there's specific things that we may find that we do, and we know that we do it. And sometimes we know that we're doing it in the moment. Other times it becomes clear when we look at the aftermath that I did that thing again. So I'm really interested in flushing out what those patterns are that we do, and figuring out if there's a way to put a stopper to them before they come about. So I'm talking about going into the unconscious or the subconscious actions and triggers within us that impact our trading. I don't know if this makes sense. I genuinely believe, I genuinely believe that there are some very simple, I'm not talking about the deep psychosis, like if we've got some real, issues we've got to work through, therapy, whatever. I'm sure there's other things that can be done, but certain behavioral gremlins, I believe we can address them. So that's just one more tick off the box, and we don't have to look at their footprint on our trade markups and profit and loss. So I'm doing a bunch of study, and when I find something concrete, I'll come and talk to you guys about it. But I'm 2 weeks in, and I'm kind of keen and excited with what I'm finding out on that front. So I don't know if I've forgotten anything, but so the insights I've shared, Tim, I've raved about. I don't know what Ken said on this, but I'm sure it was amazing, Ken. It always is. Yeah, I think that's all. So aho.
Tom.
Well, just say, wow, I'm still just trying to absorb all of the richness you have offered today. Thank you. So I'll start with one of the first lines of the human brain being naturally restless, and how that certainly I notice as a behavioral loop in me leads to impulse. Oh, just do this. And the impulse is more than a cognitive, it's unconscious, it's happening as I learn more and more at the sensory motor system level, below emotion, below cognition, below awareness, because it's happening so fast. Which takes me to my word from last week, which is frame. And a frame of coaching, a frame of what do I see in a frame in trading. And there's so much I do not see, as several of you have commented on, of what do we see, what do we not see in a frame. My Aikido teacher is continuing to show us what we do not see in the frame of what he's doing, and how we move and how he moves, and how we can't even see how he moves because I'm looking from a frame of reference that I know and have become accustomed to. And that's one of the gifts I believe Ken is giving us. He has a different frame of reference developed through his whole life, and through his practices, multiple practices, from the Army, from trading, from his life outside of both of those fields, and his commitment to master in each of those domains. So the next line that struck me in this, about the second paragraph, or maybe still the first, of being aware about my problems, inertia, being aware of my problems at one level, and at another level becoming more closed-minded about potential solutions. And how, in fact, my ego actually doesn't want me to even look at those problems because I will judge myself as being less effective. Another behavioral loop. So to me, one of this growth mindset that Carol Dweck talks about is is, well, I need to let go of the judgment and become more of an observer of myself. And being able to separate this, so this is one of my learnings from my coaching practice and adult development, is being able to move from being subject to something where it just happens and it's happening to me, to seeing it as object, to seeing my behaviors as rather being subject to my behaviors, to seeing my behaviors as object. As, oh, I did this, but I can also evaluate. Which to me is the beauty of what Tim offers in his charts. He's able to separate himself from the behavior and the trades, and he's able to describe those as more object, with the richness of insight of, oh, I saw this, I did this, I was looking at this, and now what are my questions about that? So I'm just in amazement that, as Ken described this as being his first trade series case study. In his first trade series case study, Tim was able to see it as object, to see what the essence was that he could see in the frames at those times, and to wonder about what he isn't seeing, and to wonder about, is my MMRB too tight for this point in the trade? Pretty amazing to be able to have that separation from being subject to it, where it took me a long time to even post my first trades, and look at them and invite cross-pollination of coaching and Ken's suggestions. So to be able to do that with that level of detail and that level of insight, just amazing. And I haven't followed so closely in Campfire. So now I'm curious to go see more. So thank you for igniting that in all of your comments. So this expert on what needs to change and cynicism that improvement is actually possible is what keeps me in inertia. And so creating an artifact so I could see more of my journey in trading was an incredible release for me last weekend, to be able to have that video and then be able to share that video of, oh, okay, if I look back, here's where I am, and to also go through the assessment and say, oh, okay, I'm at novice. And what a freeing place that was to say, yeah, and that's okay. Here's where I am in my learning journey. Yes, there's some things I feel like I'm operating at a professional level, but only half, a little less than half of the 74. So opportunity to say, well, what am I struggling with most? What's the one edge I want to get better at in managing me? Because I've discovered, for me, it's managing me that's the biggest challenge in my trading. The system, yes, I can follow the system better, but that's in managing me, not in the system. There's more than enough in what I've learned and am aware of that Ken teaches. It's absorbing it and putting it into practice in me that is my biggest challenge. So I think about this cross-pollination and the gift of the tortoise community and Campfire and sharing and being able to learn in community, the gift of being in a learning cohort, to hear all of what you are seeing, the frames you might be coming from, what you see, what you sense you're not seeing that you're working to see, all frames that help me see myself differently and let go of judgment to see myself better and create that shift from being subject to it to seeing it as object. The true story power of just listening to each other and listening to myself, and my observations as they're emerging through this story, because I frequently surprise myself with insights coming out that I hadn't considered that just emerged from this story. And so the gift that Ernie gave Joe and me of inviting us to talk about our accountability partnership, it was just immense, because I never would have gotten to some of those insights without Ernie inviting us into that conversation. And the gift of working with Joe as an accountability partner, because we are stretching each other to grow together. I'll share a useful method when I'm finished of how we might invite cross-pollination as a way to feed forward rather than to judge the past. And I find that really useful. So as I think about coaching, having been trained and credentialed in coaching and in one of the coaching associations, their philosophy was that, well, all the insight resides in the person, and as Sanal described so beautifully, it's helping them awaken to what that is, maybe. And that's part of it, because there is a rich set of resources. And when I can't see what I can't see, I need someone to help me see what I can't see. How to create that safety, trust, to share truthful views of what's going on and explore new opportunities in the true story mode and in a coaching conversation as an art and a craft, and has some science to it too. So it is how do I open to what I'm open to? Because I can't give what I do not yet have. So I'm excited to continue as we go along on our work in progress. And my work in progress, I'll report on, is number one thing, reducing my over than 1 hour losses to 0 over than 1 hour losses, knowing that I'll have a greater than 1 hour loss at some point in the future, but reducing the frequency of those. So I've gone a month with no losses greater than 1 hour since my last event on the 7th of December. And I've experienced the frustration of feeling like something changed from Tuesday of this week, and struggling in the markets of this week, and then to go back and assess yesterday and say, oh yeah, well, PSAR flipped on 3 of the 4 markets, SPY, diamonds, and IWM, and not on triple Qs yet. And diamonds were already in a bull market greater than 2% above the 4-month, and IWM moved into that same out of sideways into bull market, I think on Thursday maybe, or Friday. And SPY's not far from it. So market conditions are changing, and yet I'm still operating as if we were in a bear market conditions. And I need to adjust. I need to adapt how I'm doing that. And this is where managing my short bias is becoming more object to me. So that's my work in progress, managing those losses more effectively and adapting to changing market conditions and dealing with my short bias.
Let's see here. Let me share our screen real quick. Yeah, so I really think the session from yesterday, there was two. One of them was a detailed coaching of Griff Cooper as he moved from last year's effort of really maximizing the value of Kata 2. I mean, he went through a whole series of doing Kata 2s, one pattern at a time each day, symbols, and then writing the course that would teach other people how to develop their own system by how he developed the Kata 2 into a... Sorry about that. All right, so the session from yesterday had a good long hour of coaching Griff. So this was not coaching a trade, but it was really in systems and where he was in life. So he had, I think, really gotten all the value out of the Kata 2 effort of focusing on one pattern a day on a couple different symbols, turned that into a personal system, and then moved to the next level to develop a course to teach it, which is how you really learn your system, and is now set as his goals this year to work on chain trading, where he's taking the three patterns, the supported spring crossing, and then the Kata 2s to the upside, the continuation patterns, and then the supported spring crossing, and if that fails, into a collapsing dragon, and then Kata 2s to the downside. So he's going to work on all of that and talking him through his one-page, master strategy chart turned into a pretty good hour summary of the nuances of the chain trading and essentially sniper trading. The importance of compound critical states. And really, I wanted to go back to one of Sunal's comments about, is the channel wide enough to trade? Last night's discussion and demonstration of why it needs to be 4 MMRBs between the peak and the stem of the RL10 is, I think, really worth listening to in detail. And it explains why you need to have 4, because you're going to give up a box on either end to get into the trade and then give back a box getting out of the trade. So you still have to have 2 in the middle in order to justify the original trade for 2-to-1. If it's that wide, you can trade inside the channel. If it's not that wide, then you have to wait for the collapsing dragon or the emerging dragon. So that puts it into a precise or measurable mode. So I want to just highlight some of the big things that jumped out to me from what you guys. Anyway, if that was the first hour, the second hour was a demonstration of going through swing trade framing and some of the reasons why having a personal herd of targets is really crucial to being able to pull together pieces of the market and sector condition. So I want to point out for Kyun, I think it was, sometimes we advance in steps in a linear fashion. Other times we advance in jumps. And when you make a jump for a big move, you have to land and gather yourself and reset and then go again. So it's not one or the other. There are times when we make those big jumps, other times we're just marching along. And the feel for the rate of change or the rate of improvement is different in there. And we really need both of those things. One of the things I noticed you guys got out of watching Tim being coached was you watched the trader and you watched the coach, and then you ended up imagining yourself in both modes. And from that disinterested position, you actually are learning things about what you want to do for yourself. How can I adopt this or that different approach or mindset, or add that piece of strategy or technique to my own work? Just do yourself a favor sometime, go on YouTube and watch steam trains when they first start off, and what it's like to raise steam and get that first chunk, that first break of friction that generates the momentum, and feel how that thing's going. It is relentless. Just to Ernie's point about even when we are vulnerable in a true story circle and we trust our trust and others to not be judged, it still sometimes will happen. And so that's part of developing that rhino skin, and that's part of the joy and pain of trust, that will happen sometimes. And then you still have to decide whose advice you will take to heart and consider making changes, and how many of them are, it's just, well, that was well intentioned and they needed to say that, so that says everything about them and nothing about you, except that you're willing to put yourself in a position to offer trust to others. And that will help you deal with the times when you get surprised like that. I was not surprised when you related that. Yeah, I remember my judo teacher saying, hey, the judo mantra that, in the middle of, when you're on the mat and throwing each other around, it's you and I shining together. Well, that's right. Yeah, when you're pushing each other to the limits, it's, you're actually getting better. And I would just say, yeah, you got to have skin in the game for the trust to be meaningful. If you're in the true storytelling circle and somebody says something like that and it doesn't bother you, then it maybe wasn't that valuable a circle anyway. Unless you're in a position where you've got skin in the game, that's part of the risk you take going in there. So what's the 1 hour loss in a true story circle? For Jeff, I think something we'll end up talking about is the idea of the abnormal goodness and abnormal underperformance of a system over time, and that statistical treatment is, hey, taking that 30 trade trailing expectancy, and then putting the RLCO framework on that to know when you are within performance boundaries, and when does it become abnormally good, so watch yourself, and abnormally bad, so is this the time to reduce the exposure? So we got to know, not just for a system, but for the portfolio management, what is the 30 trade trailing expectancy. And that's where I think you're going to find something interesting about your work in progress, about running the 5 simultaneous systems, because you're going to be evaluating the 5 different curves, but you're also going to be monitoring the 6th curve, which is the blend. Because then once you have those characteristics, your genuine system, the true system, is the asset allocation between simultaneous engines. Yeah, and I liked your point. But of all the things that you see in a coachable moment, it's finding the actionable step that has the best payoff. So you're really making a judgment about the expectancy of the coaching advice that you're about to offer. Like when I told Tim earlier, like last week, maybe, or sometime this past week, hey, put the Z3 lines back on the sniper so that you can see when you're in the channel and you're just making sawdust. And that has to do with, he's taking trades inside the channel, and it was not 4 MMRBs between the peak and valley of the RL30, which you could see if you have the Z3 lines back on, and then that's a way to start avoiding the normal convergence after a big move. So after a big move, you found the mover, and then you want to start taking those next couple trades. At some point, the Bollinger Bands pinch, and then when you get within 4 MMRBs, you are in the normal sideways quiet channel, which will chew you up. It's not until that thing further compresses into a Z3 pinch that you can then start taking those breakouts. So that's an example of trying to make a judgment about, of all the things that I could invite him to explore, not all of them, but which is the one that, if it pays off, has the best return on investment over the widest range of futures, and then concentrate on the next most important thing. So that's sort of the coaching mentality, is that you have a working list of all the things, and you're trying to decide when to release that, to the player. Yeah, when I look at Tim and his coachability, and I already mentioned, how does that inspire you to be more coachable? I mean, it also inspires me to want to be a better coach, to match that level of professionalism and respect. For Sanal, I'd be thinking about the difference between teaching, coaching, and mentoring. And if I say teaching, I'm thinking about training. I'm telling you what to do so that you can wrap it, so that you don't have to extend your learning curve on things that are obviously transferable at the skill level. Hold your arm like this instead of like that. You won't hurt your elbow, and you'll be aligned with your shot. Just do that. But then there's other ones where the coaching is, you're inviting the player or the trader to explore their own space, where there is really choices on what to do, and you're trying to get them to learn to self-regulate by adopting a coaching eye. And then mentoring is sort of the most hands-off thing of all, in which we're just exploring ideas that are still under development. Which frontier am I going to go explore? So something like that. And then as far as changing the programs that are running in your work in progress, what is the reliable signal that the suboptimal subroutine is about ready to run, that behavioral loop that once I get into it, I just got to live through it, and I don't want to do that. One of the ways to think of that is through managing stress, the physiology of stress, and heart math teaches a technique of identifying, what is the physical signal that in about 20 seconds I'm going to get hit with a wave of physical stress that I can prepare myself for now to just regulate. I can do a couple deep breathings, slow my heartbeat, pause what I'm doing, lock in my stop, get my hand exercisers ready until I go live through the 3 to 5 minutes of stress that's going to come from a well-known trigger event, which is a spike of a reaction, of a surprise, and say, oh, it's going to trigger all of that behavioral loop of worrying about this or that I don't want to process. Well, breathing monitors and other biofeedback devices can help with that. What you're really talking about doing is taking a learned or an issued subroutine. Where do those come from? Well, from our past, and substituting a better program to run. So if you think about programming mentality, it says, I want to call this subroutine because it will preempt the other subroutine. And then we want to get at the other end, after a subroutine, we want to release the memory so that we don't have any residual artifacts in there that will gum up the machine, gum up the program. Well, that's the equivalent of psychological clearing from past memories or operations. If our biological response or psychological response to some kind of stress event has little particles that have not been processed and cleared, suddenly those are in there occupying our RAM, and it can trigger in unexpected ways. So one of the things you do in good programming is to clear the deck of all evidence of that thing and release all the memory back to the pool, and so that you fully turn off a subroutine. So we got to find ways to make intentional behaviors that allow us to periodically clear, and that we need cleansing rituals that allow us to release all of the accumulation of emotional charges over time. And for me, the owl meditation is exactly that thing, which allows me to just quickly get back into the psychological zero state with no carry forward. And to Tom's point about the human brain being naturally restless, I think of that as it's just not trying to not be restless or turn that off, except when I want to. But I think of that as a diesel engine. When I'm working and I'm taking a rest as a driver, it's cheaper and better to keep the diesel idling because the startup cost is large, and you want to keep that thing ready to work. And I was wondering, maybe dreams are the way that we get ready for immediate action upon waking up. That our biology is sensing the world around us, and those little triggers are making the brain just go through calisthenics. Maybe that's all the breathing or all the dreaming is, so that when I wake up, I'm instantly ready with a mind that's warmed up and ready to go. So people that are good in the morning, maybe that's what their brain is like. I don't know. And I would just tell you, I also I looked at the Tim video to just check myself on the kind of advice and insight I was given a year ago and say, well, as I listened to myself giving advice, where was my cringe factor, or what was really good, or was I doing things better back there, or I forget how to do this or that, and just as a way to coach the coach in that sense. So those were my notes. I have a really good model that I'll be adding later tonight that talks about, since we got a day off tomorrow, it was an aha moment triggered from creativity and talking about it with the students about the creation of effective decision making for a chaotic world that has to do with your skill with trade-off decisions. So imagine the first one being art versus science. So you need to be really good at art, I suppose, and really good at science, I suppose. And then somewhere in the middle of that, there is a region in which it's necessary to blend art and science because it's a fuzzy situation. And then you can say, what is my skill at properly blending art and science in order to meet the requirement of that moment? So there's actually a third dimension in there at the balance point. And then if it starts at a single point, you start expanding that into a circle and say, what is the region within which I am competent at blending art and science? So that little diagram of a two-headed arrow with art and science at one end and that zone in the middle, I want to enlarge the space within which I am competent at properly blending art and science to the needs of the moment. So I'm trying to respond to the environment in that sense. And now imagine a north-south arrow that has theory at the north and practice at the bottom, so that practice is grounded in the earth and theory is anchored in the clouds. And then I have that same circle that what is the right balance between theory and practice? If I need to be good just at theory to create good theories and then to derive potentials from them that are implied by the theory, which I can go experiment. But I also need to be well grounded so that there's an inductive process from which many case studies I can start to infer a hypothesis and then a theory, and so I can discover theory through the accumulation of cases. So it's that practical space in the middle of practitioner-scholar or scholar-practitioner, depending on which place you started from. That is also a region in which I need to be able to blend the trade-off between theory and practice. If you put both of those models together, the north, south, east, and west, you now realize that zone in the middle, there are times in which it's complicated enough that I am blending art and science and blending theory and practice. And then you realize, if there's two dimensions, how many? Okay, I can run a third dimension through there and now call that risk reward. How good am I at estimating rewards, and how good am I at estimating and managing risks? Oh, there is a practice, there is a science of practice of identifying and managing risk. So now suddenly I have this three-dimensional thing in which I can look through all of these lenses at once, and all I'm trying to do is is decide which of the trade-offs are the important ones for the particular problem that I think I have. I could have a trade-off in the fourth dimension. What's my default state? Am I looking at this as a problem to solve or protect against, or am I looking at it as an opportunity to seize and exploit? In my urge to fix problems, am I missing opportunities? In my urge to seize opportunities, am I missing the problems? So how am I blending the orientation of problems and opportunities inside that complexity space? What about time frame? Am I looking at tactical short-term time or long-term time or the midterm, or am I blending? So once you start looking at that, you see that it looks like a little porcupine of effective action in the middle, and all of these trade-offs running through your brain at one time. And so now there's an N+1 skill set, which is the ability to harmonize and recognize all of those trade-off decisions that are happening simultaneously inside you and that are pulling you in one direction or the other. How many of them do you routinely have to go through in order to assess what's going on in the situation? And while you're doing that, what can you do from a practical term and practical point of view to quickly get to no lose plus dinner for two? So at some point, you sort of have that non-thinking instinctual action to recognize and act on the pattern because it's good enough. And now I can think about the other ways that it develops while price is unfolding. So there's this little discussion and insight came to me walking from my office Wednesday night towards the car, which is about a half a mile away, getting my steps in. And the visualization of this thing, and I couldn't sleep very well the rest of that night. And then had the discussion, Friday morning with my students and drew it out on the whiteboard, and they were saying, "Up, it's a Dr. Long hairball. Here we go again." So, in many ways, the effective executive in the world, making decisions with real resources, under constraints, under uncertainty, trying to be professional in that domain, you have to contend with the fact that there is some region beyond which you can compute. That's part of this environment, that you're making all those trade-off decisions dynamically, because as the environment changes, what you thought was the important trade-off is no longer the most important trade-off. So I think there's always some most important trade-off dimension that is governing the next adjustment, and then there's some checklist that you go through while you can to quickly check those other ones before they become problems. So it's very much the spinning plates and the juggling balls of complexity, and that's why I think watching those plate spinners is a really important kinesthetic, physiological, emotional model to recognize exactly what it feels like to be within the zone of control and competency, and when you're as you're approaching the boundaries and when you need to make some adjustments. So I most closely connect that to the whole idea of span of control. It really does come down to what is your span of control for the number and types of trades in what time frame, and how many variables are you looking at for that system to feel like it's under your direct management. Not saying that I'm controlling the trade myself, but I can manage the trade with this many targets and this many variables at once. And so the simplification to the sniper indicator set was one of the ways to reduce that complexity down to assessment. So I think we're always moving in and around that exploratory, very practical space of the trader's mindset. So I wanted to share that with you. Imagery to follow. Right. So that's what I want to say for work in progress. And I really want to commend to you the yesterday's 2-hour session. I just thought it was one of the better ones I've ever done. So, so there you are. So this will lead, the tones will lead us into the listen for the words. And then I got to be out of here in about 15 minutes to get over to soccer. It starts at 1. So listen for your word and get ready to report. Tom Sullivan.
Push.
Ernie.
Anticipation.
Chun Long.
Reconcile.
Kyun.
Rabbit.
Sunal.
That was mine. So I'll pick relaxed.
Jeff.
Innovation.
Tom Hardison.
Observe.
And mine is trade-off. Hey, I got to get ready to go load the cart. So what I'm going to do is I'm going to turn the recording off, turn off my camera, and you guys can chillax and coffee talk as much as you wish. And I trust you to know what to do next. So here we go. And ciao for now, fellas.
Thanks, Cam.
Yeah, thanks,
Bye.
Ken.
Thank you,
And
Ken.
ladies.
And thank you.
Thank you too, Tom. Thank you for